an incredibly important opportunity that we can clinch on here. The promise of fintech has not really been realized yet, and there's an enormous amount of work left ahead of us. But whenever there is opportunity, there's lots of places for entrepreneurs to come in and build great services, and we're hopeful to be part of the contemporaries that do that.
Thank Nick. So the risk of upsetting about 90% of the room, let me just play devil's advocate for a minute and say that the logical extension of stablecoin is maybe to move to a system in the world where we have state-backed digital currencies, at which point we don't need crypto.
Yeah, so no one has a crystal ball, right? I think the point that Bob's making is that why wouldn't a central bank just issue their own digital currency? And I think it's quite likely that in some jurisdiction somewhere that will happen. If you as a country can make your currency have better properties and make it more useful for the world of internet commerce, where it's now easy to send important information anywhere in the world as easily as sending a text message, but it's still really friction-filled to move money around the world, why wouldn't you do that? So I think it's quite likely that central banks will explore these things, and I think the UK is in a really, really interesting position to potentially explore this faster than other nations. I don't think it'll actually be a big threat to crypto in the long run. I think it'll just be new competition in money. We should welcome competition. We do that in all other aspects of industries and services that we rely on, and so let the best currencies win.
Great. I'm going to come, if I may, to Oliver next. So, Oliver, your business is really creating a whole new way of dealing with business customers. Tell us a little about what that is and what you see as the key trends and how you see your business playing out over the next 5 to 10 years.
Yeah, so we tackle a market where the top 5 banks represent 90%. And effectively, the way business banking has been done like that for decades. As a matter of fact, the only proposition that was around was branches, and those are rapidly disappearing. So this is an area open for disruption. At the same time, we have some of the technologies emerging that allows sort of a new type of business banking proposition, where I would have characterized last year really as one where it was all about building product and a digital solution. We've really seen massive adoption this year. So as you were mentioning, you were saying 90,000, we're close to 100,000. Tide now opens 1 in 10 new business current accounts in the United Kingdom. So we're seeing a massive shift. And an interesting thing compared to, say, blockchain, which if you want, the adoption curve is still at the early stage, we see in consumer challenger banking and in business challenger banking where we are at, really mass adoption. And I think we will see the whole system transform in the next 2 to 3 years, where almost the distinction between fintechs and traditional banks will blur. It will really be challengers, and we will see significant market share movements between the traditional players moving to the more challenger players. And that's, of course, hugely exciting. And I think in the end, for the country, will give it the welcome boost with the outcome of Brexit being uncertain.
Sure. So interestingly, I would say that there's room for everyone, right? So if you actually look at the amount of SME lending by the big banks, the rate of growth of that lending has massively outstripped GDP since the global financial crisis. So it's not actually that big banks are lending less, they're lending more. There's plenty of room in the market for newcomers. I would say the interesting bit in the middle is the big techs and what they're doing around this area. Just comment on how you see the big techs in this space.
So firstly, I think we do see, I was talking about business banking more generally rather than lending. On the big techs, I think the story is very different between consumer and business banking. So in consumer banking, our hypothesis is very much there will be a rebundling. So it will be an unbundling of the value chain that banks have been serving, and to a large degree a rebundling, whether it's the big techs, but certainly between financial and non-financial services. In business banking, which is what we focus on, we see a slightly different dynamic. For business banking, what is essential for business owners is effectively their integration with their admin tools, so payroll, accounting, etc. So the redefinition of the value chain from business banking is less an unbundling, it's more an extension into this administration space, and new platforms will emerge. And those are pretty isolated from the big techs, because where the big techs come in on the consumer side with data, access to customers, etc. In business banking, it's really about providing this value chain and this extension into the admin services, which our big techs are not really well set up to work. So I think we're seeing two different trends emerging between business banking and consumer banking.
Thank you. Wylam, you've got a particular perspective on this whole space from the regulator. Tell us a bit about how you see this developing and how you're developing new regulation to cope with these market developments.
Right. Thanks for having me. But I suppose just for those, the benefit of those who have not heard of ADGM, I'll just quickly introduce what ADGM is about. We are a financial regulator authority operating within a young international financial center. Our objective is to support Abu Dhabi develop its position as a hub for finance and business in the region and serve as a strategic gateway between the growing economies of MENA and the rest of the world. So we are 3.5 years young. By any standards, we are a young regulator trying to establish ourselves in terms of having the credibility to operate on the global stage. But as a regulator startup, it gives us an amazing opportunity with no legacy issues to start from scratch and design the way we want to operate with a view of the future. We can reimagine the way that we want to interact with the financial markets. Right? So once we went live in October 2015, we embarked on a series of initiatives to transform the financial services sector in that region. So today, we are recognized by the industry as a progressive regulator. We've been recognized as the financial center for 3 years running by Global Investors Award. Been recognized by Seamless as the fintech regulator, as well as by Deloitte as the fintech hub for the region. Now, a lot of what we do as a regulator, right? We believe that the future of finance is going to be technology-driven, right? And to put ourselves in a position to be ready for this wave of development, we find that we have to be no longer just technology agnostic, right? We find that as a regulator at ADGM, we actually have to take a stance and an active view, be more active and interventionist when it comes to interacting with the industry for such developments. You talk about stable coins. In fact, it's no coincidence that we actually issued the regulatory guidance on stable coins 2 months before the Libra project was announced. So we have been thinking about it for a while. So when the news came out, most of the things that were raised inside there, most of the issues that were raised inside there was nothing really surprising to us because we have been thinking about such issues for quite some time, right? So I do think blockchain enabled digital monies such as stablecoins is going to create the next wave in the world of finance. And how the regulator respond to those developments will shape the way the financial sector is going to be in the future. Most of us underestimate, we think that the future of finance or developments in the industry is driven very much by the private sector, but not a lot of attention is paid by the role that regulators to play in order to make this a successful venture. So I would say as a regulator, we have moved from a preventer of bad business to an enabler of good business. That's our philosophy now. And happy to talk about more of the things that we're doing internally later on.
Good, thank you. So the cynics would say that the sandbox, which we have in this country, which in theory is an incubation mechanism within the regulator to help emerging fintech companies, is a great proposition. The cynics would say, well, actually, it's just a way of the regulators working out how they need to start regulating new businesses and then bring them inside the regulatory net. The thing that's missing from that, I'd be interested in your comment on that, whether that's how you see it. Do you think you're keeping up with the pace of innovation? And secondly, what's missing from that equation is how the big techs get regulated as they take a very significant market share in some of the key niches in the UK. How do you see those two things?
Yeah, so certainly for us to deal with the rapid changes that are fueled by technology changes, the sandbox is definitely one way for us to get close to the industry. But the sandbox itself, if you look at what's happening now, might have its limitations as well, because at the end of the day, it's an offline platform, right? It's very much engaging the startups and the financial institutions to ask what you're doing, and then helping them navigate the regulatory requirements through reporting mechanisms in a very offline manner, right? What we are trying to do now as a next stage of development is to actually create the actual pre-production environment for fintechs and financial institutions to collaborate through open APIs, of course, on a digital, online, cloud-hosted environment with direct supervision and participation from the regulator. And we find that some of these things that we are doing with the fintechs have definitely helped us embrace some of this cutting-edge technology, right? Just sharing some projects that we are doing. we are working with startups to develop compliance tokens where we can embed regulations inside such tokens. Just for example, if you want to have offerings of exempt offerings of securities to qualified investors, you can actually program those rules and codes inside these tokens. And the security will only be circulated to those that qualify or meet certain requirements based on the smart contracts, right? So those are very, very exciting things that we're doing. Another project that we're doing exactly on stablecoins is how to measure the integrity of the stablecoin, because stablecoins have to be backed fully one-on-one by digital, by fiat currencies in order to ensure the integrity of that. So we work with startups, with the RegTechs out there to come up with a mechanism to monitor that integrity of the stablecoins at any point in time. So I would say Sandbox is important, but there's a lot of room for us to further leverage technology to supervise technology itself. Now, big tech, I think, would be the one that would move the needle, because the startups on their own, through the collaboration with the financial institutions, may not be as impactful. So when players like Facebook announce Libra, and all of a sudden everyone sits up, all the regulators sit up and say that, oh, to either consider regulating or not to regulate. But for us, those conversations have started more than a year ago, right? We think that it's untenable not to regulate this space. So we started on a journey. We launched our crypto asset framework in June last year. So today we are in our first year of anniversary. We would have released just 2 updates. So I think certainly big tech is going to change the playing field.
So Nick, I want to ask you, Libra, is that going to succeed? How does that play out over the next 12 months?
Yeah, so for anyone that's not familiar with this yet, Facebook has announced that they will be working on a cryptocurrency project, which will be a stable coin. So they'll actually hold a basket of fiat currencies, including dollars, Swiss francs, and euros, and then they will tokenize that and offer it to the Facebook platform users to make peer-to-peer payments over a decentralized ledger. Now, the specifics of the technology, how it will come to market, how it will be regulated, are still very much in question. And it's very challenging for them to navigate this because they're a single place that the regulator can go to. Unlike most of the open source cryptocurrency projects, there is no one person running those things. They're fully decentralized. And that's an important difference in the way these two projects will evolve. I think it'll be more challenging for Facebook to get to market because they'll have to interface with all of these global regulators that'll have completely different rule structures. But ultimately, they're going to be really good at the user interface side of things. And so I think people getting more familiar with using digital money will be a gateway to all kinds of new digital representations of real-world assets. So some of the important things that are being done with the regulator in Abu Dhabi are really setting the track for maybe 2 or 3 years down the road, where startups are fundraising and issuing equity over tokenized platforms. There are rules that are instructed in how these agreements are put together that can automatically execute, bringing vast more degrees of efficiency to capital formation. So there's some really exciting stuff happening. And I really wouldn't underestimate how important stablecoins are. I mean, if you really think about it, like, we have bills that represent value, right? But today, these are pretty inconvenient to use. But if I can program my money, I can have it do all kinds of cool things for me. I can say, send some of it to Bob, hold some of it for this contract, put a little bit aside for insurance, and if X event occurs in the future, then execute that all automatically. Those are some of the things we're working on because we've turned dollar bills into digital instructions. And stablecoins are going to be a really interesting pathway to basically program our money. So there's lots of cool things happening, more than ever right now. And I think Facebook just massively validates the technology, but it certainly brings into question a lot of policy issues, especially at the intersection of privacy and money. And they have a lot to explain there.
Right, a couple of quick sentences each, if I may, from Sonia and Oliver on what is the most exciting, innovative trend you've seen in the last few months. And then we're going to switch to the audience, and hopefully we've got time for a couple of quick questions from the audience before we run out of time. Sonia.
Well, I'm going to stick to my trend of talking about InsurTech, but I've been talking a lot to companies who are working with motor companies, with the OEMs, the likes of GM and Ford and Volvo and so on. And I'm fascinated by the sensors that are installed in cars now. You buy a new car now, and there's over 1,000 sensors in the car that are able to monitor your biometrics, that are not just looking at fuel efficiency, but how you drive, safety. And that data is being uploaded by the OEMs every 7 to 10 seconds as you drive around and go past a Wi-Fi tower. And so far, not an awful lot is being done with it, but we're now starting to see companies pull that data and use it in lots of different ways. So it has great uses for insurance companies, but also it can be used by the likes of GPS companies, by local governments for traffic management. So I'm fascinated into how the whole insurtech is sort of integrating into big data and how data lakes are being really transformed into meaningful usages, pieces of data to sort of build information.
So I think that whole telematics area is a microcosm of what's going on in the wider fintech space. You have this, what's called the battle for the cab. In other words, who's going to control what happens inside a car that still has a driver? That's another question, right?
Yeah.
And is it going to be, right now, is it going to be the telematics companies who win over? Is it going to be the mobile telephone companies who are also making a bid in this space? Or is it ultimately going to be the OEMs as time goes on? Anyway, we don't have time, sadly, to get right into that. Oliver, give us your quick few sentences,
mine is
and
actually,
then we'll switch to the audience.
Yeah, mine is actually not a technological trend, but a behavioral one. So what we've seen is in the last 6 months, behavior by the incumbent banks towards fintechs changing fundamentally. We've seen deals being made, some of them public, between fintechs and banks, distribution both ways. I mean, at Tide, we're a platform. We have 2 big banks coming to us saying, can we distribute loan products through you? Can we collaborate? And I think this opens up a whole new range to bring the digital solutions that are already out there to a broader set of SMEs, which I think is fantastic news for the country.
So I think what I see in many of the fintech businesses I work in is this problem of, is your cost of acquisition of a customer greater or less than the lifetime EBITDA value of a customer? And if you can collaborate with an existing bank to harness their customer base without having to buy that customer base, that obviously transforms your economics. And this is what we're seeing. My own company, Bink, which is a loyalty aggregation platform, has just been invested in by one of the high street banks. We have a couple of others hard on their heels, so that's very exciting. Now, I want to throw it to the audience for a couple of quick questions, if we have time. Please take a mic, please say who you are and where you're from, and then ask your question as quickly as possible. Thank you. Anybody want to answer a question? Here, gentleman on the left.
Steve Podmore from Transform Global. I'm curious, I'm interested in addressing the Sustainable Development Goals, the UN 17 global goals. I'm just interested, where do you think the greatest innovation is coming from to tackle the really big issues, sanitation, climate? We need patient capital for many of these things. We need long-term financing solutions. So from a fintech perspective, where do you see it coming from your own activity?
Okay, so from a macro level, there are obviously the UN principles for responsible banking, which the UK banks have adopted and are working into their business plans. But Sonia, why don't you just pick up on that, and maybe then Oliver?
Yeah, I mean, I'll talk a little bit about the funding side. And, we have seen clean tech companies getting funded over the years, but it hasn't had an enormous growth as a sector. And I think that a large part of that is actually down to governments. So it's very relevant what's happening at a global stage, but actually you need individual governments and government institutions like the European Union coming together and legislating for it. And the way that we're legislating, let's say, for clean air in London, but on a greater scale, and providing grants and providing the framework to enable these companies to proliferate, because patient capital isn't going to invest unless they're going to be able to see the growth opportunities for those companies. So there has to be a pathway to actually being able to make these companies scalable, either on a national basis or on a global basis, and the capital will follow. And so there are a number of VCs who have invested and continue to invest in this space. But unless you have a framework, in the way, the government played a little bit with solar power. It dipped in, it dipped out. It did see that take off. The same happened with wind power, where again, in terms of the level of framework support that is provided at a national level, you need to have that consistently. Over a long period of time, it needs to be, over decades, for companies to be able to attract the capital they need.
Okay, Oliver, how important is this to your customers, and how important is it to your investors, and how are you building it into your business plan?
So first of all, I would absolutely echo. So for this to truly take off, which we haven't seen, it needs framework and it needs incentives. However, I would add that for many people going into business, and 70% of everyone that starts with Tide is a new-to-market business, ethical standards, the environment, but also diversity, all of these themes are quite important. And if you look at some of the member profiles that we publish at Tide, you will see small business owners taking extreme pride in doing the right thing. So there is a certain momentum there. We encourage it very strongly. For example, female entrepreneurship is a topic that is very close to our heart at Tide. However, for this to truly take up, I would actually echo it needs regulation, it needs the incentives. And then as far as small businesses are concerned, that make up, say, half of the economic wealth generation in this country, it will surely follow, but it needs more incentives.
Great. Let's see if we can do one more quick question. I don't know how much time we got. Time for one more? No? You want to finish? We're good. Okay. Thank you very much indeed for listening so attentively. Hope you enjoyed the session. I think a big round of applause for our panelists.